All right. Good morning, everybody. How's everybody doing on this fantastic Friday? We just had non-farm payrolls, and the number came in above expectations. So we got nice bullish readings here for the dollar, but we'll see if the dollar ends up being bullish or not. We're going to talk about it, but you can see here average hourly earnings ticked up 0.4%, or 4.1% on the year-over-year basis. Non-farm payrolls 216 over 170 expected. And then this old important unemployment number there, 3.7 with a 3.8 expectation. However, it's zero change from last month. So right there in line, basically without a change on the unemployment rate. So why is this so important? Well, two things. The market is still pricing in a cut for March. So let's go over here to March. March, I said. But the thing is it was at 87% at one point, and now you can see we're all the way down to 53% chance of a cut in March. With this new data, you can see that the market's pricing in a potential no cut. So higher for longer, right? Higher for longer. Now, we got Jan 10, which is when the Bitcoin ETF is supposed to be approved or not approved, right? And there are a bunch of listings, too many to even go through. And like the number I think I got was 38% of investors think there will not be an ETF in 2024. So the only thing I can tell you is watch the yearly open, as so far twice we've had pretty big bearish days. You've not been able to close the daily under that yearly open just yet. And with 5 days away, 5 days away, which I think will be on a Wednesday. Next Wednesday will be the deadline. So if you get an approval, there is potential for mooning. As you can see, this is clearly a cup and handle scenario where you have accumulation going on. It could be distribution as well. We never know these things until after the fact. But what's the problem in going ahead and getting situated and potentially putting in a bullish entry at daily support if you get another retest of that. All right. But you can see every time you get these consolidations, they have prices been moving higher. So this is definitely a difficult year to decide what to do, but we know what we're going to do no matter what. As time goes on, whatever happens to this line right here will set the narrative and it will set the trade, in my opinion. And as of right now, we are still bullish as long as we are above that yearly open. Now, here's the thing. You got to be careful out there for you very heavy leverage users because you could get wicked out. So be very careful. If you just sitting on spot, if you own Bitcoin and you're just holding it in cold storage, you don't have to worry about anything. You're situated regardless of what happens. But for you guys that are, trading around this or trying to time this event, just keep that in mind. I mean, this was a nasty, nasty day. I got short yesterday, right around that daily supply zone, looking for potential bearish move, looking for the breakdown, just based on the simple fact that continuation off of a day like this is expected. But we got a day like that back here, and you never got continuation to the downside. So remember, price doesn't move in one direction only. It chops, it moves sideways, back and forth, up and down. So we're going to see what's going to happen, but we are getting very close. Like I said, there's not only ETF news, we got the halving that's coming in around here. So what is price going to do here? We'll find out. Like I said, I think you're going to get a dump if the ETF is not approved. But I think if it is, I think you're going to see Bitcoin moon. That would be very, very, very big news, as that would mean that obviously more people can be introduced to Bitcoin. The people that are not yet involved, and let me explain something to you. There's a lot of financial advisors out there who are not involved in this space because they don't have a way to be involved. Not everybody wants to trade the CME futures as they are very volatile. You got to think a spot Bitcoin ETF. I mean, is it going to be trading at the spot price? Right? So it's still going to be a very volatile asset. But the more people that come on board, obviously, the less volatile the asset will get, which isn't very good for people who are momentum trading or whatnot. But it's still good for people who are long-term invested in Bitcoin. So there you go. That's what we're looking for. As far as trades today, like I said, I took a trade yesterday up in here. When we had this move down lower, I took profits. And then on this back up move right there, stopped me out. So kind of just sitting here without a position opened. I did take an entry on the actual news, thinking that, bullish dollar, bearish Bitcoin, but the hourly closed higher. So, I mean, I'm kind of sitting here like, so now what? Right? Now what? It's still not bullish because the hourly closes are getting lower, right? Lower, lower, lower. So it's literally wedging up, literally wedging up. And I would have expected downside continuation from this move yesterday, if there was going to be any downside continuation based off of this move here. But what it appears to be doing is this is daily support right here. It looks like people are buying daily support that is setting just above the yearly opening range. And that's all that can be said about it. So a lot of liquidations or a lot of long liquidations occurred on this day here. But people are still buying Bitcoin. People that are invested into Bitcoin or people that trade Bitcoin on a daily basis, they're still going to stay invested. They're still going to trade Bitcoin as long as they have an on-ramp or an off-ramp to do so. And that's the big thing right there. That's the bullish reason people think the ETF will be bullish. Is more investors will come into the space and they'll bring large sums of dough with them. So glad y'all could make it. Excuse the voice. It's a thyroid thing. So moving forward, excuse me. Moving forward, we're going to just keep watching it. Daily res, daily supports. That's where we're going to be looking for our entries. We currently have a daily res sitting right there at your Heath level, which is supply. And you got daily support right in here. So if you are looking for trades, those trades should be taken around 44,220 and 42,862. That's almost a $2,000 range. Holy shit. This thing is so crazy, man. Love it. Love it. Love it. Love it. I want to say this. If you do not have anywhere to trade Bitcoin, you can use this platform right here. It's called Weeks. There's a link in the description. If you use that link, you will save 20% on all trading fees. All right. You can do either the Coin M futures contract, which is what I do, or you can trade on the Futures Pro side, or you can just do spot or margin or whatever you want, right? They don't accept USDC, however, so you can only come in with either Bitcoin or another crypto, or you can come in with USDT. However you want to do it, you can do it. It's easy. Haven't had any trouble. Been able to withdraw funds. Been able to move funds over. Everything seems good. So BitGet completely locked me out. So screw BitGet. I can't believe they treated me like that. I think I need to talk to a therapist about it. It's breaking my heart. Just kidding. All right, so that's what we got on Bitcoin right there. Let's see here. I'm going to show you this real quick. This is what I had before we went live. All right, so we should be okay. But it doesn't look like it's okay. But we'll see. Let me know if there's any problems. You guys always good for that. I appreciate it. All right, so new year. So over here on the small account, I am sitting in a couple positions currently. We got sell H, which is a short put. And then I got an XLF where I have a couple contracts. You son of a... Give me 1 second here. All right. So we got a couple contracts on the XLF. The reason that I am short the XLF, I had a trade on that had me up on the year already $200 on COP. COP. I must have got rid of it because it pissed me off. No, there it is. All right, this is ConocoPhillips. It's an oil company. And basically, I had bought it on this day here, on the low of day. On the low of day test, I bought it, and it had a nice day. Moved up, and then when it gapped up, I was happy. I couldn't get out of the position because the options contract spread was so freaking wide. It was like $4 wide. Like they had $1.50 on the ask and like I can't even remember. It was like $6 on one side and $1.50 on the other. So I did not want to take a chance and get filled at a much lower price. And so what I ended up doing is just putting a 1% stop loss in there. So that unfortunately the trade got closed out at $60 instead of at like 215. So be very careful with stuff like that. I mean, oil had a down day yesterday. That's all I can think about. But I mean, that's a nasty bearish engulfing there. So it's a false breakout. I typically don't like to get long in front of resistance like this, which is why I was trying to take profits up here in the 120s because I was afraid something like that might happen, and it did. So we went from being very bullish on the week to very bearish on the week in the span of one day. So, excuse me, I am looking for new positions. I will let you know when I get in them if you are in the Discord. This is something I posted a few days ago, just to give you an idea if you're new here, what kind of alpha we produce here. Oh yeah, this guy, I beat him to the punch. This is my video. If you haven't seen it, go watch it. I put that out a month ago, talking about there is a potential pullback coming. S&P 500 hit the expected low edge of the expected weekly range. We're trading well under that now. But this is the alpha right here. So basically what I'm showing you is the US 10-year and 3-month yield curve. And this is the S&P 500, the orange line. So notice how when the yield curve inversion was being fixed, or when it was going up, S&P 500 was pulling back. All right. And then right in here, the yield curve topped out, and it took about 6 days for it to happen. And then it started to go back down again. And look what happened to this. Right. So that's the reason why I took XLF to the short side, because if we go to that yield curve inversion, as long as it is going higher, I will have a short side bias. Look at that baby today. That is fantastic. Now, there are going to be some doubters out there that say, nah, this has nothing to do with it, Heath. You just don't know what you're talking about. Look at the bullish days here. All right. And then look at the bearish days here. See that? It's amazing. It's amazing. And like I said, as of right now, I do believe we are red on the day. Yes, we are by 5 points. So it is actually getting a bounce up, but it was much lower. This would be your futures contracts here. Well, this is actually a CFD on the futures, S&P futures, but doesn't track a dollar for dollar, but it's pretty close. But you can see it is getting a bounce to the upside, which is odd, seeing how that was very bullish news for the dollar that we got. So this could be faded. This move could be faded at the open. Be careful. What do I mean by that? Well, I mean the dollar could go back up. It could go back up, which means this could be a potential short. But you're shorting it right into support there. You might want to look for a better candidate. Like, I don't know, this one. This one. I like this one better. Let's watch this one for a short. This one, if you're not watching and you're only listening, is pound dollar. We got weekly supply sitting at one spot, 26967. A good spot for an entry. I'll put an alert up there, but I doubt it's going to work because it didn't work on the Bitcoin trade. Well, shit, I'm probably going to get alerted here in 5 seconds. Anyways, so let's see here. All right, we got 3 minutes until the open. 3 minutes until the open. On Bitcoin, the price that I'm currently watching as resistance on the week's platform is 43945. 43945. Any entry around that, then I would be looking, or any trade back up to that price, I will look for an entry there. And thank you, Janet's Thoughts, for the $10 super chat. Thank you so much. I really appreciate that. Thank you very, very much. Oh, the alert worked. Huh. That's amazing. Thank you so much. I appreciate that. If you guys have any questions or whatever, just hit them in the chat room. We'll see here what happens with this. We'll see if it begins to fade on the open. So I'm going to pull. I got Bitcoin on one monitor up there. I'm going to pull the ES Mini futures contracts over here. so I can watch to see what happens there. But yeah, basically you had a spike lower. You set new fresh daily lows, which is also called overnight lows, whatever you want to call it. But you made fresh daily lows, and then you instantly started to spike to the upside, which is what we tend to do when we are looking for trades around NFP. We look for fresh daily highs to short or fresh daily lows to buy. It's just the way we do it because price tends to run the opposite direction on a big news event. Uh, Even though it should be extremely bullish for the dollar, it does not mean it will be. So remember, with that jobs number we got, depending on what CPI says, we might not get a rate cut as soon as predicted or as soon as the market is anticipating. That's why you've seen such a drastic change on the CME Fed tool or Fed Watch tool. Let's go ahead and short this right here where we're setting. Well, we don't want 4 units. We want a stop loss. Let's go ahead and go 25 pips wide. Set this to 1%, and it'll go ahead and get our position size for us there. Let's just see what happens. Because we got the open happening in 1 minute. All right, so as we wait to see if we make money or lose money, let me show you this chart. On the daily time frame, we broke down below support here. I do have a slight bullish bias on the dollar. So I did have a bearish bias on the dollar, but with everything that's going on right now, I kind of have a bullish bias on the dollar. And if the dollar does turn out to be bullish, then I want to be able to short something that trades against the dollar. So I already have a long position on Euro USD, so I can't short that. Also, we are looking for long positions on this, but we need a trade back down to support. Preferably, we would want to see 96.613 hold. If it doesn't, then we'll look for bullish entries at 96012. The reason for that is yen weakness has come back. Oh, what a shocker. Yen weakness has come back. There are your Japanese yen futures. The reason why is simple. They didn't do anything different. They didn't change anything. They're still staying at under ZERP interest rates. They're actually neg interest rates. They're at negative 0.10 interest rates. So this is probably going to get sold off again. Nobody said anything about intervention here. I think this was a short covering rally. So we shall see if the shorts come back. It looks like they have. All right. It looks like they have. There's some bullish div or bearish div going on up there and then straight down. So we're looking for that, and we're going to look to trade that against the Aussie dollar. So looking for Aussie yen longs. The reason is 90% of retail is short this asset. All right, 90% of retail is short this. So we want to look for longs, right? We don't want to do what retail does. We want to do the opposite. All right. With that being said, let's go over here and watch this real quick. Profit target on this is going to be daily support. 1.26713. That is if we get down there. So we would want to buy limit a little bit higher than that. 1.26234. And we would want to take 2/3 of 177,000 units off. So we'll just, let's get a calculator out and do this the right way here. So 177.925 divided by 3. So 59 times 2. I probably did it the hard way, didn't I? Well, no, that doesn't work. Well, I guess it does. So we'll take off 118,000 units. There we go. We want to set that to buy limit. And there it is. So there you go. All right. Important, if it does trade down there and take us out, then we'll move our stop loss to break even, and we'll see if we can't catch a longer term trend on this beast. Let's go into the quarterly real quick. Even though last quarter did close above resistance, turn the log chart on, because this trend line only works on the log chart. It has been a decent place to look for shorts. It was up in here, so we'll see if it holds here again. Now, it did tag that level and come down for a whole quarter. But like I said, that fourth quarter of last year was bullish based on the dollar pullback. S&Ps are still climbing, so this might not be a good trade. S&Ps have switched to being bullish on the day. I mean, 1, 2, 3, 4, 5 bearish days in a row. 1, 2, 3, 4, 5 bearish days in a row on this. Yeah, a pullback could be expected, obviously. But we'll see. We'll see how this plays out. Let me pull up the sell H position, because I do have a short put on that. And it's at $40. And it's far dated. It's like 70 days out. I'm just trying to collect some premium on this. So as long as sell stays away from $40, and that'll close out profitable. And then obviously we got that short on XLF, which for some reason is not working, even though the yield curve is going up. This should be going down. So, yeah, we'll see what happens with that. Not a very talkative bunch this morning, I can see. Smash the like button. Let's thank the big man for his time. I appreciate that, Ray. Thank you very much. Janet's thoughts, again, thank you for the 10. Appreciate that very much. All right. Bitcoin is pulling back a little bit, but I was unable to get the entry that I wanted. So we'll watch right there, 43,948. If it can pull back into that, we'll look for short entries, and our target would be daily support on that trade as well. But like I said, the SPOOS is flying. I don't understand why that's happening. Basically, it's doing the opposite of what it should be doing. Literally the opposite. Yeah. Maybe it finds a bit of resistance up here, as this is a major swing low. Right there. I'm not going to take any shorts on futures platform on tastytrade anymore, because the fees are absolutely ridiculous. I got feed to death last year based on that. So we're only going to do options. We were well over our goal, which was to beat the S&P 500. We got a late start, so we only got to trade from July to the end of the year with that portfolio, but we were still able to beat the S&P 500. The portfolio was up 26%, and the S&P 500 was close to that. All right, I'll go get it from here. Let's see here. I think it was right there. So 24%. We beat it by 2% on the options trades. So this year we're going to smash it, right? This year we're going to smash it. Basically, we want two-sided trade. We don't like it when something just goes in one straight direction simply because it makes it, difficult. The reason is, A, you don't want to buy something that is just going up, right? You want to buy it on pullbacks, and this is an opportunity to get long on the SPOOs if you think it's going to go higher, depending on where today closes or not. So we may be able to sell a put on the SPOOs down around 45, 49, or we can buy a call. But as long as the yield curve is fixing itself, I don't want to be positioned long on that. As long as this is going up, I don't want to be bullish the S&P. Oh, I know it's on long. Sorry. Right? We don't want to be bullish the S&P as long as this is pushing higher. Now, one thing this is also doing is it's pulling the TLT down, which, I didn't think would happen, but here's what we're looking for. We're looking for this to go up once they start actually cutting rates. Now, obviously, this move to the upside was rate cuts being priced in, right? Rate cuts being priced in. So we were able to buy it down here at $86. And then again, we were able to buy it around $89. So we were able to take profits twice on this move to the upside here. So we will see if it finds support, or what the Fed looks like. Like what do they say January? Because we have a meeting coming up on Jan 31. Jan 31 looks like they're gonna pause. So, but if he's very hawkish or dovish, that could change things. That could make the market, go back up. If he's very dovish, if he's hawkish, then we would look for the market to continue lower. But I just don't think bond traders are going to let this thing make fresh lows. Now, there's a caveat to this. There is a massive caveat to this. We could go ahead and buy a TLT call. Let me go do that real quick. Just for the hell of it. All right, so we got that. But anyways, there is a caveat. If they cut fast and hard, this will crash, right? More than likely. If they just cut, normally, nice and slow, this will go up because it's essentially they're printing money when they cut. When the money printer goes burr, we know this thing goes up. Here's your yearly. So money printer go burr, right? All through there. Well, ever since here, actually. So, yeah, that was the safe trade. And bonds got crushed. We don't expect this to continue. If it does, then bad things are coming for the economy. I mean, really bad things, because this is where teachers and firefighters and police officers and construction workers and everybody's retirement is in bonds. Bitcoin just had a nice move to the downside, so it does not look like we're going to get short, or going to be able to get short, I should say, as it's making its move right this second. Boom. So we'll see what happens with that. All right. And can anybody else think of any other trade? What's up, trader? Says Oxum. What's up? You're welcome. Appreciate your knowledge and time. Thank you very much. Does anybody have any trades, like legit trades? Now, we were looking for bearish entries on this, but we closed it. Brian hung in there like a champ and ate all of that, but he held it, and now it's looking pretty damn good. So it looks like this was just nothing more than a bull trap. Should have thought of that, but I'm out of it now. I was in it up here, so that trade would be working out fairly nicely if I would have kept that. Mara's coming off a little bit after a pullback, so we could look to sell $40 calls on Mara. We still got plenty of buying power. Let's see what Mara looks like as far as implied vol. Oh, man. 0 days, it's got an implied vol of 25.50. Ooh, that would be very, very close for $30. Long USD JPY. Yeah, you could if the dollar is bullish and the yen is bearish, for sure. 100%. It's got a nice spike up, so that to me doesn't look like, I mean, it could be a little bit of mixed of short covering rally in there, but we'll see what happens. The dollar isn't taking this news as very bullish yet, right? We were expecting it to, hence the short taken here, but it's still not doing anything. We did just liquidate this right here, so that's pretty good. So if it's going to roll over, I'd like to see it roll over soon. Now, however, that wasn't a daily high liquidation. But yeah, dollar yen is definitely a place you could look for longs. You don't want to get long today, right? You want to get short, or not get short, but you want to wait for it to pull back. There's two pretty good entry areas. One would be roughly right in there, or even in here, right? So I would like to watch these two prices here, see if we can cut back, or pull back to the 50, something like that, but at a support. All right. I think oil is still short. Almost got stopped out though. Yeah, oil, man, oil's tricky. Oil should be moving up based on rising tensions in the Middle East. But I mean, and there was a nice bullish engulfing off of support. All right, this is going to be a fantastic learning opportunity for you, because there is a trap right here. This is support right here. All right. You have your bear trap. As soon as you take out this high, which you did on this candle here, then you would revert back to using the old support and not this support. And look what happened here. Boom. Up. Oxum was able to capitalize on that move based on that knowledge, right? I do have a video on traps, how to identify them, how to trade them, but I just told you how to trade them. So I guess that screws pulling up that other video. Bitcoin back up. So wicking around, having a difficult time getting any kind of bearish continuation at all. With the ES going flying to the moon like this also, I mean, I don't see why Bitcoin would be bearish. But yeah, I mean, we're a long ways away from that yearly opening range so far. That's crazy. Came in fast, didn't it? Didn't it? Hey, Heath, any short setups on the SPY? No, not right now, because you're coming off of a 5-day run to the downside. You do have support right here, so naturally that would be the first place to look. But the SPY is testing it as we speak. So I could say potentially maybe watch the SPY, watch half-hour closes, see if you get half-hour closes above that level. As long as you do, then you don't want to look for shorts. But at any part in the day, if you fade back down to 468.26, you could potentially look for shorts. Excuse me. Getting the hiccups and burps and everything, and all I've drank is water. So, yeah, I mean, maybe there, but it may want to go up higher, and that's the problem. You do have an up day here on the SPY. So if it's going to roll over 472.16, that's going to be your yearly open as well. So yeah, those are the two places that I would look for shorts. Now yesterday I was going to short it at the open of Wednesday, but I didn't take the trade. I kind of wussed out. It didn't really wuss out. One of the main reasons why I didn't was of the fact that I never like to short at support. I mean, I hate shorting at support because usually, this is probably more than likely going to be a trap unless we do get downside continuation. So getting above this area right here potentially would have me very cautious about shorting this area. Does that make sense? Because if you take out this day's high, then this is a trap. So at that point, I would be looking for retests here for calls to trade up to 472. Oh, it's probably your internet. Yeah. Ali, good question. What do I mean when I say sell calls? Yeah, it's basically our internet ain't strong enough to. Okay, sorry about that. I was talking to my girl. She's on her laptop watching my stream, and she says it looks blurry, but okay, so whenever we sell calls, we are short or puts. Anytime we sell anything, that's called a short trade. But when you're short a put, you're actually long. All right. It's confusing, but yeah, I sold the call to collect the premium. So, and you can see it's 70 days to expiration, and it's only going to be, $63 if I'm able to get that, right? At expiration, as long as the price stays above $40. then I'll collect that premium. However, what I usually do in these scenarios is I usually wait until the profit on the trade is about 50%, and then I'll just close it and then look to short another one, right? So essentially what you're doing is you're being the market maker in that case. You're assuming all the risk though. Like there's unlimited risk on this trade. When you're just short a naked put, that means you could get put the stock at $40, 100 shares, and the account's equity doesn't have it. So I would get liquidated. But that won't happen because if it continues to go down, then once I get to a 2 or a 1% loss, which would be $60, then I close the trade out, right? I just go back in there and I repurchase the put. But selling puts and selling calls is a beautiful strategy to do whenever something is straight up or straight down, right? If something's going straight up and you don't want to buy it, you can simply sell lower puts and then just, collect the premium. Most people do it a lot further or a lot closer in time, though. They don't go out 70 days like I did. They do it around 25 days or something like that. Like I was just talking about selling calls on Mara. The reason is like if you look at the implied volatility on this thing, look at this. Today, the implied volatility is 300%. So literally, if I open up this options chain here, you can see there's quite a bit of money to be got here. The problem with it is, does it go up? Right? Is Bitcoin going to be bearish or bullish? Like a $27 call. I mean, yeah, it's only $11, but it's almost a free $11. And on a 0 day to expiration option, it's going to expire worthless, right? It's going to expire worthless, so you don't have to do anything. But I don't like to do that because that'll count as a day trade. So what we could do is we could go out a week from now and look how much more premium is on it. And I can go higher. So we can sell one of those babies as well. Right? But we just have to be cautious and we have to manage our risk since we don't know what price is going to do. So I have a short put on Celsius and I have a short call on Mara at 30.50. So price would have to get all the way up here in 7 days, which is absolutely possible. But my goal would be if we get continuation to the downside, then I'll just close that trade out for a profit, right? Because you will make money as price trades away from your strike, if you will. Hopefully I answered your question sufficiently. Basically, it's like selling insurance, right? It's best to do it when you have, like, when you own shares of the asset, but when you don't, it's called selling naked when you don't. So I'm selling naked. So if this were to just immediately spike, but I trade for a living, so I watch the computer all day long. You know what I'm saying? I can bail out of that trade at any point in time. I don't have to assume the full risk, which a short call is unlimited risk, unlimited. But it's just a quick way to make a few bucks here and there. Boom, boom, boom. And that's all we are supposed to do as traders. make a couple bucks here, lose a couple bucks there, and then ultimately over time you'll be profitable because you're going to, as long as you keep your losses to 1% of your total account's equity, you're going to nail trades that are like 3 and 4 and 5% in some cases. So that's going to wipe out a majority of those losses. And that's all you do. Now, you can use technical analysis, obviously, to help you with those entries, which is what we do, right? The whole reason we were looking to short ADM was because, well, it's in a bearish trend, right? It's going down and it's under this. So this would have been the perfect time to short this asset based on that. But I was a little bit hasty. A little bit hasty. I got in it too early. So by it going up, it forced me to close the position when I should have waited for that 50 test. This is where we, like, if you're under the 50 on the RSI, anytime you come back in for a retest of that happened on this day right here. So you could have literally waited till 5 minutes before the market closed yesterday and bought a put on this. And today or on this bullish day, not yesterday. Sorry, this was yesterday. But if you would have waited on Wednesday to the close, you closed below, you could have literally bought a put at that strike and you would have woke up profitable. And that's basically what we do. Now, it doesn't always work. See how the moving averages are all splayed out? Perfect bearishness there. So it looks like we were stopped out on pound dollar. So it looks like it's going to be a bullish day. So it's going to be the exact opposite of what it should be. All right. Now I have to go in here and cancel this order. Otherwise, I'll get filled at a buy limit down there. So always make sure you do that as well. And that's that. This wouldn't have been a bearish trade. The only reason I was looking for the bearish trade, this would have been a bullish trade. See, you're above the 50. Anytime you're above the 50, price is typically going up. When you're below the 50, price is typically going down. You want to take short side entries roughly in this area. So on this day right here would have been a beautiful day to short. Boom. This day here, short, but you probably would have got stopped out on that wick. Boom, back down. And then here, obviously, fantastic place to buy it based solely on the 21 exponential and the RSI. It's just two technical tools that are trend-based following systems that help you as a trader to gauge directional bias. I want to look for trades, but I want to look for what? Do I want to short it or do I want to go long? Well, in this scenario, obviously the trade would be long. I was only shorting it based on the fact that what we seen out of NFP should have been bearish. The dollar should have reacted bullish to that news, but it didn't. So that's why trading the news is so difficult, because you can have all the news that comes out should be absolutely 100% bullish for the dollar, and then the market actually does the exact opposite thing. You have the news, and then you have the market's reaction to the news. Back to pound dollar, I see it on an uptrend above. Yeah, you're right, Run Mountains. It was a long. You are 100% correct. That's why I just explained the reason why I took it as a short, just expecting a fade, because the news that we got should have been bullish for the dollar. So good job if you did get long on pound dollar. I mean, we have a long on Euro USD, right? Based on the same information. Basically seeing daily support hold here on multiple attempts to break down. Couldn't, so he got long. Boom, up she goes. I thought this was going to be a trap, and it was. The problem is the trap lasted for a damn week. But hey, that's trading. We don't always, I'm human. I make bad decisions as well as the next person. But we try to stay in line with the strategy. And the strategy is that, right? You look for a daily support. You got one right there. So that's where you would be looking for buy entries at that price. Set your stop under the low of day. Boom, up you go. So I need to run a scan or fix a scanner to tell me when anytime this is happening, instead of just going through and looking through all the freaking stocks in the world and stuff like that. Let's go look at the Magnificent Seven and see if we got a setup. Apple is completely over freaking sold. Amazon might be a buy in a day or so. This could have been a buy 2 days ago. Ooh, this could be a buy. We could buy this. Let's buy this. Actually, we need to wait on the close. So what we'll do with this one is what we'll do is we'll wait on the close for Goog today. If it closes somewhere up in here, then we'll look to buy it Monday morning on a retest of this daily support. Because as long as it's under the 21, it could be a sell. Similar to right in here. You can see how it was basically acting as resistance there, but then it broke out here. The sell H is down 0.5%. Let's go look at it. Why? That's totally wrong. That is totally wrong. That trade should not be down at all. And it definitely shouldn't be down $34. Because I sold that thing right around here yesterday. So basically, I sold the $40 call and want it to go up. And it hasn't hit overbought yet on this since it's been under here. Boom. This is a fresh breakout. So, but it is at resistance, so it could struggle. Oh, now it says it's up $2. See, this platform, man, it drives me crazy. The XLF trade is down, which is obvious because XLF is continuing to just go up. It's never going to pull back, ever. Tesla is not yet a buy. Tesla's got to get back above this stuff. It's got to get back above 246 before I'll even look or consider long positions on Tesla. Netflix could be a buy. It's so expensive, though, it'd have to be worked out as a spread. And a spread would be, you got earnings coming up. And you can't do a spread because the implied volatility is working against us. We'd be buying a higher implied volatility and selling a lower implied volatility. You want to do that in the opposite, right? You want to buy low implied volatility and sell high implied volatility. So if I did put on this spread, it wouldn't work. See, I mean, it's half and half, but on a $5 wide spread, I like to get that under for $1.50 if I can. Anytime it's kind of costs $2.50, then that literally means, yeah, it's a 1-to-1 risk to reward. But given the setup, it might be worth it to take it. So if this closes up today, like closes up bullish, if it closes back above its open, I'll probably put that on at the end of the day. Also, another reason why you don't want to sell the S&P 500 right now is because you are under the expected move, right? You've breached your expected move to the downside. Anytime you breach the expected move to the downside, there's always that possibility that price will trade back up into the expected range. This is your expected range high. This is the open or Friday's close, I should say. And then that's your expected move down. This red area here. So all of this is a breach. All of this is a breach. And this is price trading back up to get back inside of this range. You don't ever want to short it once that's occurred. You would probably it would be better off to wait. So next week, we're looking at something like this. Next week, this is going to be the expected range high. Depending on where today closes will determine where this goes. So when this candle closes, this black line will adjust up to the close of this candle. And that'll be your expected range for next week. I have it on the SPX also that I calculated myself. Yeah, this would have been a buying opportunity. Breach the expected move to the downside here. But at the same time, as long as that yield curve is going up, then we don't want to necessarily be looking to buy it. But it's going down, so yeah. We'll have to see if this ends up going back down being just a selling opportunity or what. The fact that it is going down, like this would be a almost a perfect short setup, right? But you didn't hit the 50 yet. So that long TLT call we bought at the open is doing pretty damn good. Right now, it's doing pretty damn good. It's already up to $67. There we go. That's what we want to see. P&L year to date. I mean, we're beating the S&P 500, but this isn't realized profits. So I can't say it until it's realized, right? Love it. All right. Yeah, that makes sense. So since I own shares, then I'd be selling covered calls on Mara. Exactly. Yeah. It's safer to do that. It's so you can it's so basically you can collect money, you can collect premium while the stock is sideways, if it's sideways. Obviously Mara is not sideways. It was moving straight up. And then we had a really big down day on it. right? We sold calls on this day here, and we made our money that day. That day right there, we closed that position out for like 50% gain on the option itself, not on the account, on the option, on the trade. So yeah, this is not sideways. But like in a period like this, when it's just going sideways, you can sell puts and calls to earn a premium while the thing's not doing anything. You can sell both. You can sell the $4 put and then sell like a $20 or $14 call. But you got to be very careful because these things can move and they can move fast. We got 4 positions opened right now. 3 of them are losing. One is doing good. I got long on the news spike. Good job. Silver Day. Silver Day. Let's go look at it. Yeah, I mean, as long as the dollar remains bearish, I like gold and silver. Okay? As long as the dollar remains bearish, I like gold and silver. But you got to buy it around 2040. And then on silver, the buy is not quite in yet. You're still structured bearish. I mean, you could take a chance on it of this being support, right? Because it did hold, and it is the definition of support. If, using our style of analysis, it is support. So one could have definitely bought anticipating dollar weakness, but the dollar's been up pretty much all week. Like, it's pulling back hard now because of that news, which is odd, but overall, this is a bearish setup. I mean, yeah, I should have paid more attention to that. I have a bad habit of not looking at the indicators and taking positions. But yeah, silver could be a buy. Let it get above the 50 on the RSI and then look for support. All right. Take profit, hit, move, stop to break even. Good stuff. So if you sell a call 1 minute before the close, does it still work? LOL. Yeah, I mean, yeah. Yeah. It doesn't mean that I'm going to be profitable, right? But yeah, you can sell a call 1 minute to the close. And on ETFs and index products, you can sell them 15 minutes after the close. But that's it. After the 15-minute mark, it's over. Like on the SPY or on the XLF and all that stuff like that. Index products. You can sell or buy calls and puts up to 15 minutes after the bell. Took profits too soon on my long. Yeah, that happens, but we don't know what price is going to do, so taking profits is never a bad call. Obviously, all right, so here's a perfect example. All right, so I bought BA down here, right? I bought BA down in here, and it ended up breaking out, and I sold it like in here. So I bought it here, sold it there, and then look what happened after. Now, obviously, that was a good trade, made a couple $100 on it. If I would have held it all the way to up there, it would have been a massive trade. We don't know that's going to happen, though. We can't see into the future. Now, if you want to be patient, you can wait and see how it plays out. But I like my data tells me that it's best if you take profits and then move your stop to break even. So that way, if indeed it does continue, you can still collect some profits as it goes up. You can stay in the trade longer. But I only had, and this was a spread too, so the amount of money that I could have made was capped anyways. But I would have definitely made the max amount possible because I bought it down here. Like I bought the 190 and sold, or bought the 190. Yeah, and sold the 195, something like that. It was a $5 wide spread. So, I mean, the max I can make on a $5 wide spread is $5 minus the premium paid for the trade. So, I mean, there's a max limit you can make. But we never know this is going to happen. So, the best thing to do would be do two, right? If you're going to do the options, do two of them. I never suggest you ever sell more than one call or put. Okay? Let's be clear on that. Because if you're naked short a call or a put, you are literally, the risk that you can lose is unlimited. That is an unlimited risk trade. That means you could lose well more than you have in an account. But as long as you're able to manage the positions like I am able to, then you can watch. Like, hey, this is going against me a little bit too fast. I'm getting out because I'm wrong, right? And or set a stop loss to be exactly 1% of total account equity. But like the XLF, I bought two, right? So if it ever does work out for me, which it doesn't look like it's ever going to work, but if it ever does, right, I can close one of them and leave the other one on for, as long as I want. But it's also a spread, so its profits are also capped. But if you just buy one individual, or if you just buy like a single, then you can buy multiple contracts of the asset, like say 3 contracts. XLF is cheap. It's very cheap. It's actually a really good options trading mechanism because the options are so cheap. So if we go look at it like 35 days out, right? You can see the premiums are cheap. Really cheap. So you could put on 3 of these. Say just buy 3 call or 3 puts in the money if you think it's going to go down. And then once your strike gets, a little bit in the money, a little bit further in the money, say up here or up here, then you can go ahead and close 2 of them and leave the last one on just in case it wants to continue to go down. But in a situation like that, you would literally be looking for like a crash to happen because this asset does not move very much. I mean, it does, but you can see here it's $31 and you're only at $37 now. So although that's a big ass move for the XLF, it's only $7, but it's a 20% return, which using options would be way more than that because the options are levered. That's a way you can take levered trades with defined risk. Whenever you go long a call or a put, your risk is defined by the premium paid. You can only lose what you paid for the trade. That's why I love options. You can take defined risk trades. That was a good trade, Brian. Good job sitting in there and holding on to that. Good job sitting in there holding on to that. Did you see the 10 a.m. data? No, I did not. Factory orders up. That's good. ISM non-manufacturing. That's not good. But that's not really good for. I mean, it's supposed to be bearish for the dollar, but we don't want to see these numbers going down. We want to see these things going up. We want to see these things getting up. Both of these. We want both of these climbing as that shows growth. So yeah, good news on that stuff. So I should probably bounce from this trade, but I'll give it a couple more days. All right, my risk is defined. Risk is defined. It's bouncing now. Oh, you probably got trailed out of it. But it was a good trade. Anytime you can make $200 or $300 on a position, that's not bad. That's not a bad day's work, if you will. You know what I'm saying? And it's only on one position. I like to get this thing loaded down, so because I don't know what the market's going to do. So I like to have some calls and some puts. You know what I'm saying? That way, on the trades that I'm wrong, hopefully I'll be right on some, and it'll even itself out. This is the number that we're growing, trying to grow. We want this to continue to go in the green and higher, right? We want to beat the S&P right now. Right now, our account is up 2% on the year, right? And the S&P 500 is not up 2% on the year. It is in fact down 1.3% on the year. So we just need to stay in front of that. We need to keep beating this, which we will destroy this year. We will destroy it. I expect to gain at least 30%, 40% on that small portfolio. Or double it even. Who knows? We'll see. We'll see what I can do. Any other questions? Any other things you guys want me to look at? Any other assets? Something that you see that could be a setup? Let me know. Airbnb could potentially be a short. I don't know. I mean, it's a setup. It's a setup. So we'll keep our eyes on this. Let me put this over here in positions. Add A, B, B, A, B, and B. Can I look at LDO USD? Yep. I don't know what it is. Lido Dow. I have no clue what it does or what it is, but it made fresh all-time highs on the Coinbase chart. This could be not all-time highs on some other chart, but on like Binance or something, but on Coinbase, it's definitely all-time highs. It looks like it hit all-time highs on Binance as well. Like, I don't know if I want to buy something that's printing bearish divergence and also hitting all-time highs. And if I did, it would have to be like at support or at the 21, right? Like if I think the trend is going to continue to go higher because it's a really good product, whatever it's designed to do, if it does it good, as long as some dude on the internet didn't build it, because if he did, then he's just going to dump it all on your faces once he becomes rich, right? He's just going to dump it. And then you're going to be left holding the bags. And at this point, you'd be left holding the bags at all-time highs. I mean, it's up from the lows significantly. You're up 600% almost, 652. So you got to ask yourself, do I want to buy something that's already up 650%? I mean, that doesn't really mean anything in crypto land, as we've seen Bonk get as high as 16,000%. But that's a one-off, trust me. I've never seen that on any other crypto asset. Not that amount of time. I mean, Bonk literally exploded within a handful of days. 3-4 weeks, that thing was up huge. Is this going to do that? I don't know. There's no way to tell. But you can watch, resistances and supports. I have a video in the playlist. If you haven't seen it and you don't know what resistance and support is, or our style, which is, the best way because it's objective prices, then you can check that video out. It's like an 8-minute video, if I remember correctly. But maybe if it gets back down to $2.60 in this area, I could potentially look to buy it, but I can't buy it where it's at now. AMD as well. Yeah. AMD had a big drop. I don't know why. It was cooking with grease. Yeah, it's a pretty significant drop. However, as long as it's closing dailies above 136.12, it's a long. It is a long. And this is something that you could potentially buy up here because the trend literally just got started November of last year when you broke out here and then you retested it here. That's like a confirmation of a bullish trend. And then you had a nice pullback. So as long as daily candles are not closing under 135.32, you could get long AMD. I would rather wait for a pullback and get long, but you don't know if you're going to get one or not. So you just have to ask yourself, do you like it here? I would have rather bought the open because now you'd be up $3. But let me move this over here. I got to keep my eyes on this thing. Yeah, I mean, I like AMD. They make good stuff, right? I mean, it's hard to find a computer without an AMD processor in it. I have an NVIDIA processor myself, but or not processor, but graphics card. They make good they make good products. So I don't expect the market to crash. I think you're just getting a pullback. You're getting a pullback. Just keep this on your chart and keep this, this right here will guide you essentially. As long as this is going down, stocks will continue to rally. But when this starts to go up, you're going to see some of them stocks, especially tech, because tech has went so hot, so high, so fast. Those are the ones that are going to pull back the most vicious. They're going to be the more riskier asset class, right? So maybe buy the tech sector instead. Got a support down there, wasn't tested. Right now you're under the 21, but that's okay because you're probably above the 50, and you are. So yeah, this is aggressive selling though. I'm not going to lie. That is pretty aggressive. It's just profit taking. It's not a blow off top or nothing like that. But it is pretty much straight down. I mean, look at that. Voom. But yeah, AMD's good. AMD's good. I like it. I think people, yeah, even healthcare is getting a freaking rally. Like, this is what we want to see for bullish continuation. As long as the overall market is bullish, energy is, well, energy doesn't trade one for one with oil, but yeah, I mean, everything is up. Even retail is up. Consumer discretionary, but this is Tesla and Amazon, basically. Tesla and Amazon are the two biggest holdings in this. So Tesla had a pretty big pullback. This is another way you can play Tesla without actually playing Tesla. XLY. Everything looks good. Bank ETFs pulling back, but financial isn't. Like, what the F? Massive bearish divergence on the daily. There is no bearish div on the weekly yet, but you got it on the daily. Their bearish divergence doesn't always work, but I would like to see it pull off at least back down at $36. And then I could profitably close that position. But the index, the equal weighted S&P 500, where did I put it? Index. This right here. This is the Invesco S&P 500 equal weight. So what this means no particular stock has a heavier weighting. Like in the S&P 500, Microsoft is the heaviest weighted, and then Apple, you know what I'm saying? Those big companies are heavily weighted, so they will affect the marketplace really badly. Like, you can be bullish in like most of the 500 stocks, but if Apple and Microsoft are both bearish, that can put some heavy weight on the S&P. This is all of them are equal weighted. So nothing has more weight than anything else. And this is trading up. This is good. This means that the overall market, like the breadth, if you will, is bullish. Right? I mean, it's almost at all-time highs. So That's very bullish. This is also a reason why we got such a massive move back to the upside on the S&P 500 and the Dow Jones, everything. Wait a minute. Something's off here. I thought the Dow Jones made all-time highs. NASDAQ did. According to this, it didn't on the futures, though. This isn't nowhere near all-time highs, which was the Russell, but I thought for sure, yeah. See? That's all-time highs on the Dow. Just massive move to the upside. That's good. That means the overall market is starting to get bullish. Look at this advanced decline line. Like 76 stocks are advancing, whereas 24 are declining. And the 24 that are declining are, what's that, United? What is UNH? Is that United Health? UNP, don't know. Verizon up. Walgreens. Walgreens is always down, and Walmart. So I mean, like this S&P 100. So this is the 100 biggest stocks in the S&P. This thing is bullish. Bullish. So we'll see what happens. Bonk is getting crushed now. Yeah, I knew it was going to eventually, but how many people have gotten wrecked trying to short that thing? You know what I'm saying? How many people got wrecked trying to short it as it was going up, saying stuff like, it can't get over 5,000%. It can't get over 10,000%. 15,000%. I mean, those are insane numbers. This isn't even the best one to look at it with. Neither is that one. There you go. Like, how many people got wrecked shorting it there? How many people got wrecked shorting it there? Because if you put this on auto, that's a massive move. Look at that. Like, that's a huge move. And that's only 800, 1,800, 1,900%. So mark that candle and then look what happens to this. Oh. Oh. But yeah. So whoever made bonk, right? They got rich. They're dumping their bags. They're getting rich right now. They are steady selling this thing. MicroStrategy might have a pullback based on the fact that Michael Saylor is going to be selling. I can't remember the exact number, but you can look at the 10Q to find out. But he's going to be selling for the next 5 months, I think he said. 4 months. He's going to be selling a significant amount of shares, but he still holds a lot more. He's just, he said that he's doing it so he can buy Bitcoin for himself, as his company already owns a lot of Bitcoin. He wants to build his Bitcoin portfolio more. Thank you, my love. It's 5 o'clock somewhere, right? I'm just kidding. It's a V8. So yeah, be careful buying MicroStrategy right now, because it might have a pullback based on Michael Saylor selling. Right. All right. I wish I could find that. Let me see if I can find it real quick. Mike Sailor selling MSDR. I don't know if this is I don't know if this is he's selling 216 million in stocks. I don't think that's going to affect the stock too much. And he said he's going to do it in like $10 million chunks or something like that. As to not hurt the company itself, right? But yeah, this is way too volatile to trade. Or the options are. The option spreads on these are terrible. All right, I guess nobody's got any other questions. Anything else you want to look at? Something, a trade set up. Can we short this? Let's go see if we can short this. As we gotta get some inventory. We need inventory in this bad boy. What was that? What was that ticker symbol? ACGL. Get some inventory in this beast. It does not have weeklies. It spreads a little bit too wide. 380 to 430. So the setup is there, but I do not like the spread. Did you see the spread on the put options? You see this? $1.45, 460. You stay the hell away from something like that. Way away. I know this says 410, but look at this. You have $5 wide spreads. That is no good. Cannot trade that. ACN, Adobe, ADI, Pyth, USDT. Pyth, USDT. Yeah, this is it. I don't know what. I hate to use BitGet. I'll use MEXC. This looks new. Let's try OKX. That's different. What is that? Issues on the exchange side. Okay, so we're not using that. I don't know. How big was that spike? Oh my God, 42,000%. 42,807. That is terrible. Yeah, this is probably going to get burned to the ground too. You're breaking below support right now. That's support. I mean, each time you break support, you expect it to go lower, right? Because it's breaking supports. You want to buy something that's moving up. Some people are going to call this a bull flag. It is not. So we know that it went up to 42,000%. It's currently trading at 2,700%. Now, I know you can only lose 100% on any asset unless you're using leverage. Then you can lose more than 100%. Keep that in mind. But I don't know. I'd probably leave this alone. It's probably a good trader. Like, it's probably moving very fast. But yeah, I would leave this far, far alone. All right. You guys have a fantastic rest of your day. We'll go ahead and wrap it up. And we will see you again next week. All right. So make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.